Well, we're back with you on the Market Day Report. I'm Arlen Bowling with you on a Monday, and we're going to get some expert analysis on the markets here as we take a look at our futures open. In fact, let's go to the board right now, and I'll get you updated first on the prices, and then we'll bring our analyst on. Let's go to the corn right now and see how things are opening up. It was quiet overnight. On the corn futures right now, we have the December down 1 3/4. Interesting. The weakness creeping in here. 347 is the last trade per bushel, and now down 2, 346 3/4. Let's switch over to the soybean trade here on the early going. We have the January contract on the beans 7 higher at 997 3/4 per bushel. On the wheat trade in Chicago, we have December down 3.5 cents at 410 3/4 in the early going. That's on the low of the opening range. Kansas City wheat on December is down 3.5 cents, trading at 408, also on the low of the opening range. That's a nickel off our overnight high. And Minneapolis wheat, the spring wheat trade, is trading a penny lower at 509 1/4. Cotton market this morning in the early trade is showing December up 52 points at 69.05 cents per pound. Let's go to the phones and welcome our guest analyst. It's Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, as we look at the opening trades here, the market is showing strength in the soybean trade versus the corn market here this morning. Any idea why the soybeans are firming up like they are?
Well, I think so. You had a sale here to, I think it was China, 132,000 tons. I think there was one to Philippines for a like amount, so that's been supporting the market. And another thing, too, we've had some pretty good export inspection numbers here for the past few weeks, and we have not peaked on our exports yet, but typically beans do peak as far as their exports in the month of November, so within the next week or two we should see that happen here.
Dewey, and we've been talking about it here for several days, the fact that we have some major crop reports coming out here in a couple of days on Wednesday. It's going to be the crop production report and also our supply and demand report. They'll be released at 11 o'clock in the morning Central Time. And we just got some early estimates out this morning, some early survey estimates, if you will, based on a survey done of the traders and analysts around the country. And we had a corn and soybean production estimate taken, for U.S. production for this year. On the corn, they're looking for production of 15.02 billion bushels with a corn yield of 173 bushels per acre. They're looking for soybean production at 4.32 billion bushels with a soybean yield of 52 bushels per acre. So that's getting up there fairly strong. So what do you make of the early estimates that we're seeing here?
Corn, I'd go pretty much along with. I think if there is going to be a surprise in this report, it could be in the bean yield, especially as the beans yield is estimated higher than traders are looking for.
All right. Now, as we have that report coming ahead here in a couple of days, I mean, do you expect this market to be fairly quiet, I guess, overall, considering all the news that's going to be happening here this week?
Well, it could be. It's a little hard to say because for 5 solid weeks here, we've had funds have been piling on in the beans. Last week, they bought 105 million bushels. Now they're long 510. If they continue to add to their positions, you may not see that much of a hard break in beans until we probably get after the report. I don't know if tomorrow will be very much in the way of any volatile trade or not. Could be because we got the election.
Yeah, we've got a lot of stuff going on. The new harvest update will come out from USDA this afternoon at 3 p.m. as well. We'll have those numbers for you tomorrow. Dewey, hang on. We'll come back in a moment. We'll analyze the start of our livestock trade here on a Monday when we talk with Dewey Strickler right after this. Thanks for joining us on the Market Day Report on a Monday. I'm Arlen Bowling with you. Well, we're talking right now with Dewey Strickler. Dewey happens to be with AgWatch Market Advisors, and he is based in Franklin, Kentucky. And Dewey, as we turn pages now and look at the livestock market activity here as we start out the week, we look back at the direction that we had from last week. And on Friday, it looked like that cash cattle market was steady to maybe $1 lower or so. That was about the same range as what we saw on Thursday that developed out there. This was kind of a cleanup type trade, they say, on Friday. The market was weak in the knees on the futures trade on Friday. Let's see how they're opening up here on the live cattle and feeder cattle on a Monday morning. Right now in the live cattle trade, we have December down just 14 cents at 102.58 per hundredweight, and we did have a high already of 103. So at one point we were a little higher on the day. Right now we're just a little lower. February down 52 at 103.78 per hundredweight. Meanwhile, on the feeder cattle side, we'll switch over there. Here we have the November contract down $1.12 at 124.50. However, January is just down 55 cents this morning, and now it's trading at 117.30 on the day. That's a quick turnaround, Dewey, because we had a high already of 118.22, and that's backed off about 90 cents from our earlier high. So at one point, in the very, very early trading today, we had higher trade in live cattle and feeders, but that's kind of disappeared. Looks like a little bit of a knee-jerk reaction going on here in the early trade.
Yeah, I think that's exactly right. I'm a little bit concerned about the cattle because we have a pretty heavy spec long position by the funds in the cattle market. So, last week we might have jumped up a little bit too quick on the cattle, and we're probably paying a little bit for it now.
Do you think that possibly that's what we saw in the opening bell here this morning, with some people trying to get in there and jump the market a little bit, thinking we'd been down for a couple of days and it was due for a bounce again?
I think that's about it, just a dead cat bounce.
Okay, let's take a look at the lean hog open this morning. And as we jump over there, on the lean hogs, we have December currently 50 higher. Now we're trading at 46.65 per hundredweight. February now 55 higher, now 54 higher, make that, at 53.52 per hundredweight. And the April contract is up 28 cents. This lean hog trade is kind of interesting. I was looking at a December lean hog chart here this morning, Dewey, and we rallied for about 2.5 weeks. Sold it off for about 3 days. I just wanted to ask you if you thought maybe that was enough of a technical correction on the charts to satisfy the market or not right now.
Well, it very well may be. I'm not going to get too friendly on the hogs until we get a little bit above this 48 mark basis, the December contract. If we do that, then I think we do have a bottom in the hogs here. Of course, we were up a little bit on the cutout last week, but I still think the hog market has got some work to do here to show that we do have a meaningful low end.
All right. Well, very good to talk with you again, Dewey. I appreciate all the comments this morning. Dewey Strickler happens to be with AgWatch Market Advisors, and he is based in Franklin, Kentucky. And we'll be talking more with Dewey in the coming days as the harvest wraps up. Interesting, Christina, I was talking with analysts on my commodity wrap show this morning on Rural Radio. That's channel 147, by the way.
Sirius XM.
Yes. And anyway, we were talking about the hog market right now and the demand. And they said, well, you think of Thanksgiving as a poultry holiday, but the buying is pretty much done, and they said now already wholesalers will turn toward Christmas. That's ham season.
All right.
We'll see.
I guess you can kind of interchange the two as well. That's what we're going to do.
We'll see what happens.
Thank you so much, Markets Editor Marlon